Think about the last time you bought an ice cream cone or filled your tank with gas. You provide payment, you receive the product, and the transaction feels effortless. In economic terms, the ice cream and the fuel are goods, physical, homogeneous items that can be owned and stored. Services, however, are essentially acts. They are performed rather than produced. Economists define the nature of a service using the 5 I's framework. This chart shows how services are intangible, inconsistent in performance, inseparable from their production, have no inventory to store, and require the direct involvement of the consumer. For most consumers, the physical good is the only visible part of the exchange. We focus on what we can hold, seeing only a fraction of the actual economic machinery at work. But the physical economy depends on an unseen foundation. Mastering the invisible services behind a product is the only way to successfully bring a good to market. Consider the logistical challenge of running a petrol pump in an isolated rural village. The owner must find a way to transport and store thousands of liters of highly flammable liquid in a remote location while managing the extreme financial and safety risks involved. No single business owner can solve these problems in isolation. They must plug into external, specialized networks to move the product and secure the funding. This isolated pump acts as the terminal node of a massive, interconnected web of business services operating constantly in the background. The first barrier is financial. Oil companies typically demand advance payment for fuel inventory, and most small owners lack that kind of upfront cash. Commercial banks address this by mobilizing public savings to provide institutional credit. They offer the loans and advances that allow businesses to fund their capital expenditures and inventory. Telecom and communication services then allow that owner to instantly coordinate with distant banks, depots, and suppliers to manage those funds and orders. Without these financial and communication pillars, local commerce would be limited by physical distance and a lack of immediate capital. Next is the geographic challenge. Raw materials are often refined at massive industrial complexes located hundreds of miles away from the end consumer. Transport services physically bridge this gap, using specialized tanker trucks and rail cars to move bulk product across the landscape. Beyond geography, there is the problem of time. Refineries produce fuel at a constant rate, but customer demand varies by the day and the hour. Warehousing services solve this by acting as consolidation and break bulk centers. They store inventory safely until the precise moment it is needed. By aligning bulk transport with strategic storage, these services ensure that a product is available at the exact moment and location a customer wishes to buy it. Even with the logistics settled, the business faces existential threats. Handling highly explosive products means a single accident could bankrupt the owner and destroy the entire enterprise. Insurance provides a solution through risk management. The owner substitutes a small, known periodic payment, the premium, to protect against a massive, unpredictable loss in the future. This protection relies on 3 principles. First, utmost good faith requires complete disclosure of risks. Second, indemnity returns the business to its prior financial state, preventing profit from disasters. Finally, proximate cause pays only if the loss directly results from a covered cause. Insurance acts as an invisible shield, giving entrepreneurs the confidence to take the necessary risks required to build and grow a business. Before a single liter of fuel is pumped into a car, a complex choreography has already taken place. It involves bank loans, specialized logistics, and rigorous risk management. You cannot touch a transport schedule, hold a bank loan, or inventory an insurance policy. These essential components of trade remain entirely intangible. While we often focus on the physical goods we use every day, business services are the nervous system of global trade, providing the invisible and essential coordination that allows the modern economy to function.